my name is Tunjai.
Hey, my name is Max Bauer.
Hey, my name is Will Nathan.
Hello, my name is Yuan Tian.
My name is Oluwale Fagbesa.
This video presentation is about comparing and contrasting Ted Baker and Burberry on their internal and external strategy models. An introduction to the industry will be discussed, followed by strategic grouping and where the Burberry and Ted Baker are positioned. Then a Pastel, SWOT and Porter's 5 forces analysis will be contained within the video on the two organizations and the industry. After this, a resource-based view will be also included. Finally, a ratio analysis will be included along with a comparison of Ted Baker and Burberry's value, revenue, dividends and product values. Fashion industry means creating and manufacturing clothes, footwear and accessories that are popular. The clothing market in the UK was valued at £34.7 billion and contributed £21 billion to the UK economy. Many organisations are globalising in order to increase sales and brand awareness. They also produce products in countries which have cheaper labour to cut costs. Burberry has moved production to China in the hope of increasing sales there and cutting costs in the UK. Many companies, including Burberry, advertise heavily in order to gain sales. However, Ted Baker is known to spend almost nothing in their advertising and still be a success. They had an 18% increase in profits in 2002 and a 10.4% increase in the first 3 quarters of 2012. This is due to expanding to China, Netherlands and many more countries.
Strategic grouping shows how companies from the same industry categorize themselves. So although they are in the same industry, they have a different target market. Burberry aims for the wealthy audience by designing top quality products and placing them in the luxurious category to set high prices. Whereas Ted Baker aims for the middle class audience where they are not as expensive but as good quality. But looking at other fashion brands, Ted Baker supplies good quality products for just above average prices. VAT increases didn't help the fashion industry. Many small businesses and major brands felt sales drop. During the economic crisis, people were struggling as they were. With the increase of VAT, it meant they had to downgrade or go on for the time being with what they currently have. Social issues always arise in the fashion industry. Many have been accused of using cheap labour abroad to maximise the organisation profits. Burberry had been accused of using cheap labour and being abusive against their staff members. The factory was a company that Burberry worked with manufacturing their bags, but after the rumours came out, they stopped trading with the Korean company Simone Accessories Collection. Organisations who have stores are struggling to keep up with costs due to sales dropping caused by economic issues and online fashion websites. Because they do not pay as much wages or rent, they have lower costs than designers like Burberry, Ted Baker, Zara, etc., who charge higher because of higher costs. The internet has seen a popular demand, whereas many shops on the high streets are suffering as a result. Due to the recession, people have spent less. High streets suffered as a result and profits therefore went down. Burberry saw a sharp drop between 2008 and 2009 from £201.7 million to minus £9.1 million according to the London Stock Exchange. Ted Baker also saw a drop, but not as effective. They dropped from £22.14 million to £17.16 million. One of the main issues these days are people do not follow the law in countries like China, Turkey and many more who sell products that hold the brand's name even though they are not authorised to do so. This means it damages the company's image and sales. Although it is illegal for people to do this, in less developed countries it's hard to tackle these issues. LV, Gucci, Dolce & Gabbana, Burberry are the victims of intellectual property issues.
Now I'm going to talk about the SWOT analysis for Burberry Spring Diversity Network. Burberry distributes its products through retail, food sales, e-commerce, and the licensed distribution channels. This balance makes diversifies its risk and keeps income steady. Strong branding. Burberry is a top 100 international brands and as one of the most innovative brands in recent times. Take deep streets in the digital world. Its record sales as a further testament to its strong branding. Weakness efficiency. Burberry inventory turnover is low compared to industry standards. For a fashion brand that has cyclical demand, it is important to take over fashion styles fast enough to meet trends. A low turnover is an indication of a weak efficiency. Now I'm going to talk about the SWOT analysis for Ted Baker. Strengths. Famous brand in UK. One of the famous Ted Baker is one of the famous fashion brands in the UK that offering a wide of fashion dress collection, including skinwear, footwear, and watches. It has a large number of loyal customers. Brand diversification. Ted Baker has widely products and provide clothes for different ages and preference people. It has diversity products and consumers. Brand diversification decrease risk and increase revenue stability.
For Burberry, as you know, it's a global company that produces an exclusive range of clothing for a niche market of people. It's generally branded as the very wealthy end of the scale. And they are listed on the London Stock Exchange. They were founded in Basingstoke in 1856 by Thomas Burberry. The headquarters are in London, and the chairman is John Pearce, and the CEO is Angela Ardenis. So Burberry, for the resource-based view, Their physical is that they have 9,000 people working for them, and this is headquarters, not just at the headquarters in London, but that's 9,000 people around the world. It has 473 locations, which is stores worldwide, mainly in London, Paris, China, Hong Kong, Tokyo, and a lot of Southeast Asia, but as well as Europe as well. The production is on a large scale, and the clothes are produced in China, and they're selling them to a global audience. So that's 9,000 people, including people who work in China for Burberry as well. Moving on to the financial aspect of the resource-based view, the revenue for last year for Burberry was £3.5 billion. And then below that there was the operating income, which was £302.1 million, and then the net income after that, which was £206.3 million. So it's a difference between that between Burberry and Ted Baker is that they make a lot more money due to being on a global scale. The human resources that Burberry have, as mentioned, is 9,000 people, and that's 473 different locations. They have something like 16 different HR managers within the business, so that's dealing with everyone who works for the business and also the clients as well. And the intellectual capital for the last one for Burberry is that the client base is very big, spanning the worldwide, and generally a lot of people it's generally branded as the wealthy end of the market, as I mentioned, and there's a lot of niche people who buy Burberry, so there's a clear difference between that and Ted Baker in the sense that Burberry is at is making £3.5 billion a year at Burberry, and Ted Baker is turning over about £205 million a year. Okay, so this is the other resource-based view for Ted Baker, comparing against Burberry. Ted Baker are listed on the London Stock Exchange. They're a public limited company, founded in Glasgow in 1988. The chairman of the company is Robert Breer, and the revenue for last year was £215.6 million. So moving on to the physical side, the physical aspects of the resource-based view for Ted Baker. They have strong standalone stores in the UK, mainly in a partnership with John Lewis and House of Fraser, principally because it's cheaper that way to put it in rather than having your own store in, say, the centre of London. But they do have stores, the physical stores, they do have staff members and stores in Glasgow, Nottingham, and obviously they have sections in London where they put staff as well as having in Spain, France, Germany and Italy. The financial side obviously is that they last year they turned over £215.6 million. They employ around about 3,000 staff. That's the entire across Europe as well and England. They haven't really moved into Southeast Asia yet, so that reflects on their financial report, seeing that they're mostly a UK-based company. And then moving on to the human resources side, obviously I said that they have about 3,000 people working for them. That's across Europe and the UK. They have about 270 stores within Europe, and that then again reflects against Burberry is that the contrast between the two is that Burberry have nearly 500 stores with 9,000 people and a turnover of 3.5 billion, but Ted Baker only have 3,000 people and 270 stores. And the intellectual capital is that the client base is generally in the UK. It's more of a uprated top man. Ted Baker is more uprated top man, so that they only attract a certain amount of a certain client base, which is more of your everyday people, whereas Burberry attract the wealthy end of the market. Yeah, I mean that's pretty much it for Burberry and Ted Baker on the resource-based view side.
This is our financial analysis. We're going to talk about the ratios of Burberry and Ted Baker. First of all, there's the return on capital employed, which was 38.33% for 2012 for Burberry, which means that Burberry is making a good deal of money, so they're making more money than actually investing. For Ted Baker, it was 26.32%, which is slightly lower than Burberry's, but it's still making good weight of money. The overall trend for Ted Baker for this ratio has been upwards in 2009, so they're on a good way. Next thing is the earnings per share. It's a special interest for the shareholders who want to see a good dividend. It's 60p for Burberry and 32p for Ted Baker, which is like 40% less than Burberry, so you can see in this area Burberry is making much more money than Ted Baker. Next one is the price-earning ratio. For 2012 for Burberry it was £23.8, which is a good value because it means an investor would pay that amount for £1 he invested in the company. So actually Burberry is the company with the highest PE ratio in the whole industry, according to Yahoo Finance. The trend has been upwards in 2009, where it was £9.20, which also the company has been constantly improving and increasing. Ted Baker's PE ratio for 2012 is £15.30 and has been increasing since 2009, when it was £11 until 2011. It has therefore dropped slightly since last year, which means that Ted Baker is currently facing a slight negative trend, as well as doing worse than Burberry in this area. Now we're going to talk about the dividend per share, which represents the amount of money the directors are paying to the shareholders for each share they're having. In 2012 it was 25p for Burberry. For Ted Baker it was 23.4p. But that's quite interesting actually, because although Burberry is making much more revenue than Ted Baker, they're almost giving out the same dividend. So in our view, the shareholders at Ted Baker are taking more seriously than at Burberry. So this is about earnings per share growth. This is actually about the potential growth of a stock. So Burberry's earnings per share growth is 26% for 2012. The overall trend has been positive since 2010. But it fell back to 26% from 49% last year. So that means Burberry's management does not think this growth can be sustained. Same for Ted Baker. Its earnings per share growth is 18%, which is less than Burberry's. It has been mixed. It has been going up and down lately. So you could say Ted Baker's management does not believe in a near future growth either. The revenue for Ted Baker was 250 million. In 2012 for Burberry it was 1,857 million. So the share price on the 11th of December for Burberry was £1,297. For Ted Baker the share price was £1,095. Now I'm just going to talk quickly about the product and price range of Burberry. So obviously, Burberry product ranges from classic evening wear, so suits, shirts, evening dresses, to accessories such as bags, shoes, belts, wallets, and jewelry. They also offer a lot of home accessories, but also like slightly more casual clothing such as denim jeans, t-shirts, and polo shirts. They also offer coats and skirts for children. The special focus is on trench coat, as you can tell from its history, because Thomas Burberry invented the trench coat. You can get a customized one, which is obviously going to cost you a lot. Burberry also offers a lot of swimwear recently, and there's 3 lines of Burberry: Prosum, London, and Brit. Ted Baker more or less offers the same range of clothes, you could say, really. Suits, jeans, classic evening wear, more casual wear, such as hoodies and swimwear. So you can also really say it's aimed at a much younger group of customers, which you can also see is reflected in the price. Ted Baker also offers a wide range of accessories, such as shoes, scarves, cufflinks, and fragrances, wallets, iPhones, and iPad cases. So again, you can see clearly aimed at younger customers. Makeup bags are available as well. You can get a gift card. The only thing is, unlike Burberry, there's only one line of clothing for men and women. So there's no 3 different kind of lines. It's just one thing for everybody.